Will owning BYD shares help you to build your dreams? So what exactly is BYD? The initials are familiar, especially to people who follow global stock markets. The actual BYD, translated into English, stands for Build Your Dreams, or even more accurately, Building Your Dreams. And what is it? It's an automotive electric car company based in Shenzhen in China. Is it the Tesla of China? It could very well be, unless Tesla is the BYD of the United States. It was founded in the mid-1990s by Wang Chuangfu, who's a very, if not the most successful businessman in China. And the company has evolved really on the strength, I would say, of its battery productions. It's in mobile phones, it's in many other vehicles other than cars. And the company has grown to the point where its market cap is about, measured in US dollars, that's not a very accurate statement since it's not based in the United States, but it's about a $100 billion company. Financially speaking, BYD is a successful company. Why is it? Well, it's the largest EV manufacturer, probably not just in China, but in the world, in the sense that it's been in production for some number of years. It did produce some internal combustion engine cars. Financially speaking, the cars, the cheapest one sells for about 10,000 US dollars, and it goes up from there. These are very sophisticated electric cars that sell not just in the China market, but generally there, but also in other markets. Revenues for the company have been strong, but as we all know, we're in a global recession of some kind, whether it's defined as a recession or it just acts like a recession. The point is, while companies like BYD have done well in terms of selling more cars than ever before, same with Tesla, as companies and countries want increasingly to sell EV, electronic vehicles, at the same time, revenues have somewhat, to say that they've stalled is incorrect. They have pulled back, and you see that in the stock price. What in particular holds our interest about BYD? Well, perhaps the savviest United States investor, Warren Buffett, bought into the company through Berkshire Hathaway, which is his investment vehicle, in 2008. What did he pay per share? He paid about $2 a share, and he bought a large chunk of what was then a very emerging EV company based in China. Was it a good investment for Berkshire Hathaway? No, it was a great investment in the sense that the stock has traded up, this is in dollar terms on the ADRs, from $3 a share to about $40 a share. Now it's pulled back, as all markets have pulled back, to, I would say, roughly about $26 a share. Still, for Warren Buffett, who believes in long-term value, buy, hold, and never give up a core position, and BYD may be a core position in the Berkshire Hathaway portfolio. That's one of the reasons why Western investors especially look to BYD as a global competitor, for example, of Tesla and some of the other companies, Ford and General Motors, which are also going into the production of EVs. In terms of the stock price at about $26 per ADR share, it's been volatile, there's no question, but global markets have been volatile, not just for this particular company, but for all companies. If you were to throw up the chart of any automotive company, Tesla included, you would see it has its good months and its bad months, and I think we can expect more headwinds in the next quarter, 2-3 quarters for sure. Let's hope not more than that. At the same time, what do we like about BYD and what don't we like? Let's start with the positive. Always try to talk about positive. The country of China, the world as we know it, increasingly will demand electronic vehicles. It has battery technology, perhaps not as good as the Tesla battery technology, but a range of about, in kilometers, 300 kilometers per car. So that's a very positive development of electronic vehicles. Second, what we don't perhaps like about the BYD stock is that you're paying about 100 times earnings for one share. It implies that it's overvalued if the PE ratio is one that you stick to. Warren Buffett himself proudly once said he only liked to buy stocks under about 12 or 10 times earnings. So for Warren Buffett, would he buy into BYD today at these valuations? I suspect not. Is now a good moment to be investing some of your savings into BYD shares? Could be. I'm not a prognosticator in sense of understanding the future, and markets especially are hard to predict. The technical signs, if you're looking at BYD, implies that there's more of a downside than an upside short term. Markets are under pressure, especially automotive companies have seen that people are cutting back on capital expenditures, and that will cut into the demand for cars such as the BYD electric cars. At the same time, and here you have to a little bit rely on the judgment of someone like a Warren Buffett, who's a shrewd and long-term investor. You have to say, wait a minute, China consumes a lot of automobiles. The world consumes a lot of automobiles. There are not that many major players in the EV market. BYD, Build Your Dreams, is a player in those markets. Increasingly, countries will mandate the purchase of electric vehicles, and that is long-term, I think, a positive sign for shares such as BYD. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.